We have the management of Suryoday Small Finance Bank. Mr. R. Baskar Babu, the MD and CEO, is joining us. So firstly, we'll start off with the NPA side. If you see, we have seen an improvement not only on a YY basis, but also we are seeing positive trends when it comes to sequential basis. Can you tell us what led to this improvement, and can we expect the GNPA levels to sustain below the 2% levels going forward?
Yeah, good morning. The overall trend is reflective of the cleanup of the portfolio, which is the pre-COVID portfolio. The new portfolio, which we built July 21, has been performing as robust as it was pre-COVID. So that's one of the reasons why the NPA levels have come down to sub 3 gross GNPA levels. And we expect that to be less than 2% at the end of the year as we guided. Fairly confident that we'll be able to achieve it.
Hi sir, good afternoon. This is Vinny joining in the conversation as well. Also what I want to know is in terms of the growth in advances, that was at around 12% during the first half of FY24. Could you share some bit more light in terms of the growth outlook for the loan book going forward? And, you're also given a target of the advances, I believe, of growth of around 30% YOY in your Q1 con call. Does that still hold?
Yeah, we did around closer to 29% in terms of increase in AUM year-on-year basis. So on a quarter-on-quarter basis, it was up by around 9%. Fairly confident that we'll be able to maintain the trend, and what we are getting is around 30 to 35% in terms of asset growth and 40 to 48% in terms of deposits. Deposit growth has been good at around closer to 50% year-on-year, and we expect that to continue in the range of around 40% at the end of the financial year.
Well, if you see that the PCR was at 50% this quarter, and although it has improved on a sequential basis, what is the target when it comes to the PCR ratio? How will the provisions shape up with the growth in the Vikas loans?
We continue to kind of start providing floating provisions, and we expect that as guided, it will be closer to 70% at the end of the year, maybe marginally higher, but around 75% is our PCR expected at the end of this financial year.
I also want to know in terms of any specific target that you have for your NIMs for the year end, and how do you expect that going forward? NIMs have gone down this time around 80 basis point quarter on quarter basis. So what should we be expecting on that front?
We have guided that our NIMs will be in the range of around 10%. There was an increase in cost of deposit by closer to around 70 bips compared to the previous year. We fairly believe that it has been priced in at this point of time, and with the right mix of deposits, we'll be able to maintain a margin of around closer to 10% in Q3 and Q4.
And when we see to the deposit growth, that was higher than the advances. The cost of funds have also gone up. The NIMs have also gone down by around 80 basis points. Is there any target for NIMs from your end? How do we expect this to shape up going ahead?
I think we'll be fairly comfortable at NIM of around 10%. So it's kind of it as well. It has come off compared to the last quarter as well as to the previous year. We will inch up by at least a couple of basis points every quarter, and we'll be closer to 10% at the end of this financial year.
And in terms of cost of income also, what has led to that uptick in cost of income by around 600 basis point? Any specific reason? And, what is it that we should be expecting in terms of, do we expect them to remain on this higher side?
It will fairly remain flattish. While we had a decrease in terms of PSLC income in Q2, it was more than compensated by the increase in processing fees because of higher disbursements in Q2. So we do believe that the PSLC will moderate out in Q3 and Q4, but it will be reasonably compensated by the processing fees which will come out of disbursement.
Thank you so much, sir, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And that was the management of Suryoday Small Finance Bank for you all. But